Phil.
Welcome back to the podcast. Our guest this week is the one and only QTR, Quoth the Raven, Chris Irons. Super excited for this episode. I'm a huge fan. I'm a huge fanboy of QTR. I read every single thing you post on Fringe Finance. I
Wow.
listen to the pod. I missed the old podcast, but I'm watching the new ones now with Gammon. And thank you for coming on.
Phil, we know each other well enough that you don't have to say that you're a fan. I think at this point we're just acquaintances, we know each other. So, anyways, but
Yeah.
you're welcome and happy to be here and great to see you.
No, it is true. I think there are. I was actually to say that there are very few that I think have such an appreciation. Just there's so much in finance that's about, pedigree and vocabulary and people trying to be fancy and trying to obfuscate what they're saying with, with lingo and the way you just are able to clear away the bullshit and just, get to the heart of things and do it with humor is really rare and really fun. And that's really the gist of what I want to get to today on the show is how did you get from point A to point B? How did you are now one of the top writers of finance on Substack. You
I'm not.
are.
Hang on. Everybody keeps saying that, but I'm
You
not.
are.
Julia LaBroche just said it too. She's like, you're one of the top ranked Substacks. I'm like, I don't think that I am. I
I mean,
appreciate it,
yeah, if you
but
cut it off at like the top eight, maybe you're not. But if you take to the top nine or whatever number you are, you are. So, like it or not, man, you are. You've done an incredible job, and it's a great stack. And anyone who's not subscribed needs to be. But it's really, I think, the question of how you got there, because we're going to start this story with you are a bartender in Philly, which is how you started, and to go from there to where you are today is really exceptional. I mean, you didn't start in the Morgan Stanley analyst program, right? So I want to hear that story. I
no.
want you to tell that story because I think it's an absolute great story. I mean, it's like a movie quality story. So let's start there. Let's just kind of, take me back, man. You are a bartender in Philly, right? You're trading on Scott Trade or something, right? And you're talking. I mean, what was going on with your life before you got into finance, leading up to all this?
I don't have the temperament to come up in the Morgan Stanley, junior executive training program. I don't have it in me. Some people are good at taking the dong from people in positions of power who are playing to their own personal insecurities and failed marriages and tiny penis syndrome and whatever other things bosses take out on their like interns at these major banks. I'm not one of the people that is capable of handling that. So I would have lasted probably about 30 seconds in one of those programs. So probably a good thing that I didn't come up that way. No, yeah, I really was bartending just as like a placeholder for a really long time. I bartended for like probably 15 years total. And when I had kind of uh, finished graduate school, I went to like a local university in Philadelphia to do graduate school and did a program that wasn't really an MBA. It was just kind of like it was called strategic leadership, but it was more like an MBA, like business light kind of program. Um, and when I came to, I was still bartending, and actually, I had thought about going into hospitality management for a long time. I loved the restaurant industry. I knew it really well from working in it for 15, 20 years. So I'd worked every position in a restaurant that there is, from, front of house, back of house, manager to busboy to working the grill to working saute to bartending to you name it. So it was an area where I felt comfortable. I had actually done like Cornell had this continuing education program. It was called like it was like a certification, like a master certification, I think it was called. But it was like a year-long program, and they have a really good hospitality management school. So I wound up doing that as like a continuing education thing, and thought I was going to just stay where I was in Philadelphia. And in fact, I had even told the owners of the place that I worked at that, I wanted to stay on there and kind of, it was a family-owned business and help the family run the pub. But that changed, again, I had always been interested in markets. I was investing poorly and learning equity analysis and how the market worked on my own, basically by failing often, um, and losing money often. So that was kind of running alongside of, okay, going to graduate school, learning a little bit more about, that was the first time I was introduced into, cash flow statements, P&L, balance sheet, just kind of the basics there. Um, And then one day when I was bartending, I met somebody who was traveling on business that was working for a startup company in Niagara Falls, New York, that was turning waste plastic into usable fuels. Not unlike, a little bit different, but not completely unlike Pure Cycle, which is the company that we can talk about at some point that's getting a lot of notoriety. I think Druckenmiller invested in them. And I spoke to this guy about the business for a while. I found it really interesting. And when he left, I wound up, pouring a lot of my obsessive analytical side into learning about the business. Went back, watched all the presentations, watched all their conference calls, read every 10K, read every 8K, and pretty much memorized everything about the business top to bottom, which was really like my first, I think, obsessive project in the world of equity analysis. So I was an investor in the company for, I don't know, 6 months or a year. And the company was at some point sued by the SEC for accounting fraud, for misstating some assets that they carried on their balance sheet. They were carrying these media credits that they got from an acquisition of another company, which I think, to the best of my knowledge, were essentially like some type of credit that could be used in the future for promotion or marketing or advertising. I'm not sure what the nature of the asset was, but they had booked them at fair market value when they were supposed to have booked them at cost, or vice versa. They took some type of liberties with it, whether intentionally or unintentionally.
Different times when you miscategorizing
I
a
know.
media threat would get you an SEC. Now it's
I
like,
know.
hey, SEC, I just robbed my client. Like nobody cares about
I
anything.
know. And what was funny is, like, there were a lot of short sellers circling this company as well, because it was a cash burning company, basically making promises that sounded too good to be true. They had a technological development that a lot of people thought sounded too good to be true. It was uh, basically a variation on a theme of pyrolysis, which is plastic recycling technology that's been around for a long time. This was the system that used that, which is basically catalytic cracking in the absence of oxygen. But they had some proprietary things that they had put onto their process to make it a little bit different. And so the big question was, is this company just peddling technology that's been around forever? Or did they really have something different? But in the interim, while people were trying to figure that out, you had short sellers really aggressively, like, going after the company, probably hooting and hollering to the SEC about things like this, among other claims that the company was making that probably sounded too good to be true. And I kind of knew from my research in the company that, and just from the indication that I got based on observing the management, and the feel I got for the team, that I thought it was more likely than not that what they had was legitimate. Of course, I'm not an organic chemist. And I also thought that it was more likely than not that the company didn't have nefarious means behind misstating these media credits. It's such a weird thing to get nailed on. It didn't really give them much of a benefit. I think, like, people were saying, it inflated the balance sheet, maybe, so kind of helped them look better when they went to raise money or make a different acquisition, I think, was what the SEC alleged. But regardless, like, it was legitimate, that it was meritorious if you wanted to hold them to the letter of the law. But when I reached out to IR about it, I got this very canned response that was just like, the company doesn't have any comment, or I forget what it was, but whatever it was, I just didn't think was good enough. I thought that the issue was that everybody was painting the company as a fraud because of the claims that they were making about their technology. And the SEC was alleging fraud about an accounting entry, and that I thought people were throwing the baby out with the bathwater, and people were disregarding the entire company because there was an allegation of accounting impropriety. And so what I thought the IR would be well to do would be to distinguish that, hey, like there's an issue here, we're going to resolve it with the SEC, or we're in talks, or we claim we're innocent, or whatever. But the technology is sound, and we're continuing and trying to develop and commercialize the product. And they weren't doing that. So after a couple months, the stock crashed after that. So I lost, most of my investment that I had in the company, which was fine. It wasn't, it was a material amount of money for me then, but thank God not anymore. And I wound up just getting the CEO on the phone one day. I just called him and I was like, listen, like these guys that you have doing, they had like a third party firm, they were outsourcing their IR. I'm like, these guys, they don't got it. Like, they just don't know the business. Like, they're not doing a good job. I said, I'd love to come up and work for you. I didn't know dick about investor
Well,
relations.
yeah. So I mean, what was your job at the company at the time?
So when I went to go work for them, I was like their head of investor relations. But because it was such a small company, it was basically 30-person company. At the time that they got sued, they had an accounting department, I think, of like one. They were an OTC listed company. So by the time I got there, I think they had a couple more people in accounting, but it was really a makeshift kind of ragtag team of the guy, I think that was the CFO, I think was like 23 or 25 or something at the time. It
Okay,
was
so when you're saying like, you went ahead and called the CEO and said, "Hey, I want to take a crack at this. Like, let's fire the third party IR team. I want to do this myself." It wasn't like you climbing like 500 rung, like, but I mean, you still had to have, quite a bit of conviction in yourself to be able to say you want to do something that you have never done before, and to be so convincing about it that you convince him to give you the keys to the company on it. That's like no small thing right there.
Well, I believed in it. I had done my research and I saw what the short sellers were saying, and I knew what I knew. And again, not an organic chemist, but it doesn't mean that I can't learn the basics and uh, you know, start to piece things together a little bit myself as to whether or not, at least whether or not I thought you had a group of honest people or you had a group of swindlers. And that's what I was trying to distinguish from the get-go. And from watching these people speak at conferences, and later I would learn from meeting the team, I mean, they were just the honest people just trying to get something done. So for me, I thought it was a really interesting opportunity, and I was kind of glad that it hadn't taken off, because I felt like it would be a great time to go up and get in on the ground floor. And
What did you say to the CEO? You're just like, "Hey, these guys don't get it. I get
I
it." Like,
said,
I mean, yeah.
I just said, listen, like, I love what you guys are trying to do. I said, I know everything about your company. I could, and I think even when I interviewed with him, I recited, part of his annual general meeting speech the year prior to him, like verbatim. I remember him saying to me, like, I don't even remember saying that, like, I was like, yeah, it's okay. Like, that was cool because my obsessiveness in researching the company paid dividends when people would ask questions, shareholders, because I knew what the answer was without having to look in the 10K. I mean, as an IR professional, you can only talk about what's publicly disclosed, right? So your job is basically to parrot what has been publicly disclosed in this continually ongoing, like, layered series of precedents that, Reg FD and your 10Ks and 10Qs and 8Ks form. So you need to know what the latest answer is, and you have to know what you can talk about and what you can't talk about as it relates to what's MMPI and what isn't. So for me, that worked out great. What I said to him was just, I know everything about the company, and I'd love to. I didn't have anything at the time. I didn't have a car. I don't, like, it was just I had to rent a car to go up to do this interview. The company was on this like industrial. It was in Niagara Falls, New York, and they were gifted an old chemical plant by the town of Niagara Falls, I think for the price of $1 because it was sitting atop a pile of toxic waste. This Niagara Falls, New York. I don't know if you've ever been there, but it's a nightmare. Just in terms of contamination. It's where Love Canal is. It's where Hooker Chemical used to be, where they used to manufacture like Agent Orange. So there's this one strip in
Jeez.
Niagara Falls, New York called Buffalo Avenue, where it's just like OxyChem, Olin, fucking. It's where Hooker Chemical used to be. It's all like refineries, like chemical plants. Niacet is out there, fucking all these like all these major chemical companies. So our little like green recycling plant was sat in the middle of these like crazy massive chemical conglomerates out there. So when I drove up there to interview, I had turned onto that street the first night at like 2 in the morning. And it looked like it reminded me of when Batman showed up at Axis Chemical in the 1986 version of Batman. It's like dark and there's these like mysterious lights and you kind of see smoke and towers and it just looked like a hellscape. And I got up there and I'm like, what the fuck am I doing here? But next day showed up at the plant. Like the people couldn't have been nicer. I met the team of again like 20 or 25 people that were working there at the time. Uh, the It was cool because the CEO took me around the plant. He showed me all of the things that I had only known from, the slides that the company had put out or the presentations that the company had done. So it was cool to see all of that in person and kind of get that validation and watch some of the machines actually work right in front of me when there was this big ongoing debate online about like, do the machines work? Are they really doing what they say they're doing? And, to step into the plant and to watch the machine operate, you're like, okay, cool. Like, so that was a nice moment for me to kind of remember going forward to trust my due diligence and that keyboard cowboys don't always have the right answer. And then I wound up moving up there and it was cool. I worked mostly IR, but because it was a very small team of people, um and I was eager to do whatever I could to help. Like I spent time in the yard of the plant, cleaning out the oil skids, helping with whatever, moving feedstock, helping. I was there when they were assembling the machines. I was working with the guy who was helping put together the Honeywell machines for some of the machines. I did like a little bit of everything. So, it was cool. I went to work in steel-toed boots and Carhartts every day, and I wasn't one of the fucking grinders like the actual plant workers were, because we had some great like fabricators and welders and operators, like just some of the fucking coolest people I ever met in my life. But it was cool to be involved like with other things at the plant as well. And I did that for like 2.5 years. While at the same time, to answer your question, was helping draft, 10Ks, 8Ks, helping do the quarterly earnings releases, the talking to investors, um, talking to securities lawyers, talking to C-suite executives, and learning about public reporting on a really like firsthand baptism by fire basis, which was great because that and constantly defending the company from short sellers became incredible assets when I started to find my way into the world of being a market skeptic or a market cynic, and then eventually working with short sellers. So it was cool to get in from the other side kind of and understand like, all right, like here's what people are looking for to here's where people are trying to poke holes in companies to try to determine whether or not they're frauds or not. And that was a great place to start. So eventually that company wound up not being able to raise money any longer and got to, I don't know, what happened after I left, but it got defunct and got to a point where, it showed up one day and the trash wasn't getting picked up and the lights weren't on. So it was like,
Yeah.
okay, like we're like that kind of out of money. There was always talk the whole time I was there that we needed to raise money because we were spending a lot trying to commercialize the process that we were working on, and that required fabricating all types of new equipment. It required putting up new buildings. It required putting in a loading dock. We basically wanted to run like a pilot plant, like a pilot commercial plant where we were, so that we could show to people like, here's our plug and play model. You can put it in wherever there's feedstock that you can use and go about it then. But we just got to a point where we were unable to raise money in the way that we needed to. And one day it just became real where like I showed up and it was like, all right, nobody's getting paid and the lights are off. So it's like, all right,
Yeah, I mean,
it's
the company
probably
was
time to go
probably
back
too
to Philly.
soon. Based on everything you're saying, I'd imagine that today they would have no
It would
problems
be
raising
it'd have a
capital.
$50 billion market cap today.
Yeah, especially with someone like you spinning narratives now that we're all, narrative-based valuations. But you had gotten yourself, really from bartending in Philly in a couple of years into now you've got a career. Now you understand, the language and the people and the whole process of IR of SEC reporting. And you did it through, being able to, talk to people, right? Meeting the guy at the bar, talking to him, having him bring you in and recruit you in, and then doing just a little bit more research or reading than the next, right? You knew that
Right.
you could do the IR better than the third because they clearly weren't paying attention to what the CEO was saying. They weren't reading the reports. And it's like I just think like nowadays there are so few people that actually read the source documents that do just that. It's not
Right.
even that much, but that little bit, that one extra layer of research, like it makes you like one of the very few. It's so much edge. Like, I guess it's kind of like a little bit of a lecture for young people who are listening, but like, you take that little bit extra of just trying to understand and read, hey, what's the source of this? Or, like, what can I read that, like, just takes me one layer deeper. And I really can separate you and can really,
And
catapult your career.
it was a risk too, because I had just told this family in Philadelphia that I wanted to stay at the bar longer term. And I had, just gotten through this hospitality program that took like, I think a year or a year and a half. So I had just kind of almost committed to that. And so it was a really, it was uncomfortable to have to tell them that I was leaving at that time. It wasn't, they weren't happy about it, which I understand now. Um, but I had a therapist say to me once, we can't sometimes you can't look away from your destiny. And all of the big decisions in my life, whether it was working for this company, going up there, or coming back and working with the people that I have, or starting the podcast or ending the podcast, or starting the Substack or ending the Substack, or traveling or moving, they've all come very naturally to me. I've never forced the issue with a major decision, because when one comes around and I have conviction, I'm going, and this was just one of those things where I knew that if I had the opportunity, I had to take the risk. And I took a lot of my pay in stock. I left there broker than I went up there. I came home with a pile of credit card debt and nothing else. But I also had 3 years of like awesome experience, not just as an IR professional. Like, yeah, okay, it's dope to understand why securities lawyers write certain things in 10Ks, but like, I met fucking great people. Like when I moved up there, I didn't know anybody up there at all. And I wasn't in West New York for a week before I walked into a pub to watch the Flyers playoff game and met like somebody that would be my best friend for like the next 3 years, and a whole group of friends that I just had like the three best years in history with. Like I went from knowing no one, literally going up there. I was living in this village and they had like two or three bars and a bowling alley. And I went to the bowling alley the first night I was up there. I remember just sitting at the bowling alley, on like a Friday night. Dude, I'll never forget this. I ordered a shot of Jameson. The whole bowling alley was like closed. There were like three lanes open on one side of the alley, where there were probably about six people who were like yelling and like hooting and hollering and like drinking, and who were like, and I said to the bartender, I'm like, first off, I'm like, is this place always this dead? And he's like, yeah, not much going on. And I said, well, what's going on over there? And he's like, that's like the league championship. And I was like, what league? He's like, the fucking Greater Lewiston Bowling League, whatever the fuck it was. And I was like, oh, okay. And so I looked back over and I just saw this guy like with the bowling ball kind of like walk up at, like he was going to go take his shot or whatever, whatever you call it in bowling, roll your fucking frame. And he was so drunk that he got up to the line and then immediately kind of started to stumble backwards a little bit and like lose. And as he was losing his balance, like his trusty teammate got up behind him and like kind of caught him, was like, get on up there and bowl us a strike, Dale, or whatever his fucking name was. Kind of pushed him back towards the lane, and sure as shit, this guy fucking stumbles his way over and bowls a strike, and everybody goes crazy. And I'm like, where the fuck am I? Like, what am I doing? Like 3 weeks ago, I had a revolving door of like, college women at my bar just hitting on me. Like, now I'm out in the middle of West New York watching some drunk guy named Dale bowl a strike for a league championship that zero people are like watching. I'm like, what? Like, what the fuck happened? But like, it wasn't like a week later that I met like such a fucking great group of people, like 5, 10 solid people. And I just hung with them for the whole 3 years that I was up there. And then I had a couple of coworkers that I really, really liked too, that I got along with really well. So what I missed in generational, wealth and retirement from getting in on a startup early, I made up for in 3 years of just fucking having a great time. And so that was that. So I came back to Philadelphia kind of broke. I had started reading some short selling reports while I was up there because I was learning a little bit more about short selling. And Ackman had started his campaign against Herbalife, and I had noticed that some of like Muddy Waters and Geo Investing and Citron were writing about a lot of these Chinese reverse takeovers. So I started reading those reports and kind of figuring out that wow, short sellers do the best due diligence on the street, and it's not even close. Um,
Yeah. So, like, I mean, that's what I was thinking when he said, like, oh, the therapist said, like, you can't, like your fate, you can't interrupt your fate. Like,
yeah, you
your
can't
fate
avoid
is
your
not,
destiny. You can't look away from your destiny.
can't look away from your destiny. Okay. Your destiny was not to be the head of investor relations for a public company. I mean, you tell me, it doesn't seem, that doesn't really, I mean, that might have been great. That might have been a way to get you where you needed to go. But I think short selling, because you're not doing short selling anymore either. But I think being a short seller is much more I think, right? Being on that side of it fits your personality and your natural skepticism a
Yes.
lot better.
Yeah, I mean, you said before, like when we started the interview, like, it's a world full of jargon and fancy terms and academic sounding bullshit. And really, and you said, well, you have a good sense of humor, and you kind of have to because as you start to unearth what's really going on, and you realize that all of these terms are just cover for most of the time bullshit accounting tricks. Um, you know, various types of deceit, um, fraud, grift. Once you learn that, you can't help but be a skeptic. You can't unsee it.
You
Like I know
can't
you
unsee
know
it.
this, Phil,
You
right?
can't unsee it. And that's
You-
why, like, the era that we're in now with, the never-ending bid and vol sellers just win every time over and over again. And I mean, we're seeing short sellers now. I mean, it's kind of jumping ahead a little bit. We're seeing short sellers like close their doors left and right. And the best of the best short seller. I mean, you can't make a living with a short. And you take out the short sellers, like who is the last one to keep markets honest, to keep individual companies honest? Like now you've got, the passive bid that does not care a lick what they buy or what, everyone talks about the meme stocks as if it was this like organic grassroots thing, but what a load of BS. All the trading patterns clearly show, you can see the gamma squeeze. You talked about this a lot. You can see the gamma squeeze. You can see all the institutional flows. These were sophisticated efforts to people forget that the Russell 2000, the Russell 3000, the Russell, I'm sorry, the Russell Russell 2000 value, I believe. I double check it. I wrote about this at the time. That three of the top four holdings at one given point in time were all meme stocks. AMC, GME, and there was another one.
Which is to say nothing of all these U.S. listed China based shell companies that have like WINS. There was a whole lot of them, and their whole deal was pumping the stock up enough so they get Russell inclusion, so that they do get that passive bid. And then you had these insiders in China cashing out, and there was never a business there to begin with.
Yeah,
And so these are the ones that you see they trade at $10, then they go to $600, and one morning you wake up and they're at zero. And that was a wash, rinse, repeat. Um, at one point, actually, I think Edwin Dorsey is collecting these names now over at the Bear Cave. But at one point, my friend Nathan Anderson from Hindenburg Research also had a running tally under his personal account of all the NASDAQ listed companies where, he had identified essentially that they identified the pattern. You had the reverse takeover, you'd have a name change, you'd have a business model change, then they would be pumped in these underground WhatsApp chats. And I saw many of these chats. I saw how they operated to try to get some liquidity into the company. They get a small bid. The company would get big enough to get Russell inclusion. When there was an index rebalancing, there'd be forced buying. The company would shoot from zero to $500 a share in 2 weeks because there was no liquidity at all. It was either tightly held, or there weren't a lot of shares outstanding, or it was tightly traded, or the order book was thin. And then after that, you'd have insiders sell gratuitous amounts of stock, and then nobody cares what happens to the company after that. And somebody would write a report, and the next morning it would go to zero. And so you had all these retail investors that were stuck in that. And that's a playbook that's an offshoot of a playbook that I started seeing in 2012, 2010, when Muddy Waters and Citron and Geo Investing started identifying all of the reverse takeover scams. If you haven't, I recommend watching a movie called The China Hustle. It's on Amazon. Is You can just go online and rent it for $3. It's called The China Hustle. You should watch it. It shows exactly how all this stuff went down, how the auditors were complicit, how the exchanges were complicit. It's an offshoot of that playbook, and it's still happening. And it's brazen fraud, the likes of which you never thought could happen on U.S. financial exchanges. And again, going back to the things that we've said before, once you see it, you can't really unsee it. And so, yeah, you think Nvidia is taking some liberties with its circuitous relationships that it has. Okay, yeah, you think Fartcoin is ridiculous because it's essentially $50 billion of nothing. How about a company that just blatantly lies on all its SEC filings, and then there's no jurisdictional recourse at all? Insiders have siphoned tens of billions of dollars from US investors into China through these reverse takeovers. I mean, if I was the president of the SEC or the president of the United States, I wouldn't let a single fucking Chinese listed company do business on a US exchange after what I've witnessed over the last 10 years. It's absolutely ridiculous.
but here's the thing, right? When you pump these things into the index funds, and the index fund is the bag holder, what a perfect victim, what a perfect bag holder, because not only do they not know, they do not care. The
Right.
victim doesn't care. Like they tell you, they come out, passive investors, like belligerently, like make fun of anyone who does any sort of valuation analysis or due diligence. They're like, oh, ha, 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 we, and like,
Well, and
it's,
you
I
don't
mean,
see
I
it.
don't want to
It's
say they have it
it's the
coming, but like,
the passive bid is like it's like a big giant air cushion, So
yeah,
what's a $10 billion Chinese company collapsing to zero overnight and 100% total loss for shareholder only shows up as a 10 basis point blip on the Russell 2000 index. And so you don't even see it. It's like inflation. It operates in the dark
yeah.
machinery of the night, right? Like nobody, if we all had to sit and watch the national debt clock at our house tick up every minute, or watch the purchasing power of our dollar tick down every minute, if we had some visual indicator that never stopped right in front of us, it'd be one thing. But we don't. It just happens in the background, in the cloak of night, just like these companies kind of using these indices as their cushions for exit liquidity. And it's the same thing we're seeing now with valuations being driven up in the passive bid. I know all this shit, but yes, is the point. You're right.
The amazing thing about the China Hustle, which I agree, great film, and I think you were in it. I want to get to that in a second. But the amazing thing is, you've got people literally doing research on these companies. So you got like guys with binoculars sitting on rooftops watching the activity in and out of a warehouse during like International Investor Day, and then the next day, like the investors are there and there's all this activity, and then the next day it's like totally dead. But these people are like risking their lives sitting on rooftops with binoculars. And then you contrast that against the level of due diligence that is done by institutional investors, by financial advisors. I mean,
How
they
about
do
auditors, right?
nothing.
How about
Auditors,
an
rating
auditor?
agencies.
How about an auditor in this
Yeah.
situation, like like a Long Way Petroleum, right? Which was a company that geo investing went to and physically saw, like, hey, the rail spur is closed and there's grass growing over it. Like, they haven't taken a rail of fucking petroleum out of this factory in 30 years. They were asking villagers in wherever it was, Guangzhou, I don't even remember, but like they were asking villagers, like, when's the last time the plant operated? And you have these people living out there that were like, that plant hasn't been open for 20 years. So contrast that, okay, with what people think auditors do, and now get it through your head that, like, the auditors in these companies, and not just these companies, okay? How about Luckin Coffee? How about fucking, what was the other one? NME was the other big one, Wirecard, whatever. The company hands the auditor's numbers, and the auditor says, okay. They don't go through journal entries. They don't check that the cash is in the bank, and they don't check that the fucking factory doors are open. That's not an auditor's job. An auditor's job is like to make sure that things reconcile between the financial statements, and so you have this, you have these major lapses, and it's the same with the exchanges, right? Like, well, how does a company like that get on NASDAQ? Basically, you pay the exchange listing fees and you're on. Congratulations. So when I say all the time on these podcasts, do the work yourself, don't trust anybody. Like, yeah, okay, that's kind of, it's
Yeah, but
my
people aren't
it's my
punished for not doing the
manifesto,
work
it's
though.
my motto, but like the truth is nobody is doing the work.
Nobody's doing the
Like
work, and worse, nobody's being punished for not doing the work. Like when people
right.
start to really like, but they're not being punished. In fact, over the last 5 years, I would say that people who have done the least amount of work have been rewarded for doing so. If
Correct.
you're buying MicroStrategy, at 2 times notional the amount of Bitcoin it holds, like it's
Right.
like the worst thing. And people that are buying, they're like, oh
That's
no,
walking out your
leverage.
front door. That's walking out your front door to a guy that's selling $10 bills for $20 and paying him
Yes,
$20 to buy a 10 over and
yes,
over and over again. And,
yeah.
which is something that when you break it down to an example like that, 900 out of 900 people are going to say, there's no way we would do that. But when you package it up and you call it MicroStrategy and you make up a bunch of reasons as to why paying 2 times MNAV is worth it, then all of a sudden, ooh, it makes sense. But,
Because people they stumble into it, they get lucky, and then they got to make up one of two stories: either they got lucky or the thing was
right.
gamma squeezed for reasons
Or
out of
they
their
knew it.
control, or they knew it, they were so smart. And
Mhm.
which are they going to believe, right?
Yes.
But then
And
you
this is
watch
all
these
this
things
is all
after the
that Wall
fact.
Street does now. This is all that Wall Street does now. They backfit narratives to
Yes,
meet price targets.
yes,
It's like Kathy Wood. Like, you know, Kathy Wood is a name nobody would ever know if for some reason Tesla didn't 10x between December 2019 and mid 2020. Now, why did it 10x? Did the business prospects get that much better that the company went up 10 times? Was it all people buying equity? Were there just so many people eager to get the stock that no, it was a gamma squeeze in the options market, whether it was intentional or not intentional, or whether it was manipulation or not? That's what happened. So if there isn't this magical fairy dust in the options market that causes an equity to 10x, which you'll never convince a lot of these retail people, God bless them, by the way. I love the everyman, but you'll never convince these fucking retail people that were in the name. And I see them on Twitter all the time. They put in their bio, all in Tesla investor since 2016, as though there's something noble about allocating everything that you have into a single investment. But whatever, you could never convince these people that there's something unnatural about that move, because the way that they see it is It's a revolutionary company that's doing revolutionary things, and they deserve to make money off of it because they were there first, and that's fine. You know what? Like, that's a great story, and you're more than welcome to tell yourself that story. But if you've watched tape every day for 10 years, like I had done before that, and then you just saw that move in that stock. It happened over the course of like really a month, and you saw the options buys that were coming in. And at the time, I was party to multiple services that pointed out unusual options activity. There had never been anything like that in Tesla. It was a name that I watched very closely. I traded, probably day traded every day. You know, you had never seen such insane, blatant, long dated, out of the money, multi-million dollar options buys at the offer as you saw coming in succession. And so to this day, I still think it was like what happened with GSX. Everybody knew something was weird. Muddy Waters came out and proved it was a fraud, and it went from 10 to 150. And GSX investors said, wow, I'm really smart. Well, I'm sitting back like, well, somebody's trying to squeeze the shorts. And so what do we find out like 3 years later? Oh, Bill Huang had taken on leverage on leverage on leverage on leverage on leverage to, manipulate it through the options market so that he could mark up his underlying, right? Okay. Then you can fucking circle that square. I still haven't circled the square of what happened to Tesla in 2019. But the point is, you're not going to be able to convince those people that there was something else there other than, hey, they're a genius and they were in the right time at the right place, which is sad because I see these people that have made millions on Tesla, and I'm stoked for them. Trust me, like, great. If you've been successful, nobody's gonna be happier for you than I am. But they're now emotionally attached to the
Yeah.
idea that they
Yeah.
have to ride with Tesla to the death. They have to ride with Elon to the death. And unfortunately, at some point, I don't know when, reality will kick in. You have a company that's, earnings is declining and is trying to make a pivot from a legacy car business to basically an AI robotics call option. So far, the market has allowed that to happen, but it's not the same thing. And so I said to Julia LaRoche, there's a reason that past performance is not indicative of future results is the main item on all financial brochures everywhere. And it's because it's the truest thing that I think most people should remember. So my point is, nobody would have ever heard about Kathy Wood had she not have been in the right place in the right time with Tesla. Same goes for Ross Gerber. I mean, you think that guy, broke through to the mainstream because
Yeah.
he's the, and God bless Ross, okay? But like, did he break through to the mainstream because he's some, deep thinker because he's fucking Jim Simons, and he's got some proprietary algorithm that the rest of the world doesn't know about? Fuck no. Right place, right time. And then since then, they've had to backfit basically. Every year, Kathy Woods releases a new stupid price target on Tesla. And every year, just like Dan Ives and Adam Jonas and all these other people that have committed to like being bullish on Tesla come hell or high water, they've had to backfit their narratives to explain these astronomical price targets while estimates for the company are like a tenth of what they were 3 or 4 years ago. So fundamentals don't matter. What
Yeah.
matters is being able to backfit a narrative to, explain massive market distortions. And you see this in indexes too, right? This is people say, well, I guess it's just animal spirits, Phil. It's like, well, what does that mean? Well, it's the Santa Claus rally. Well, what does that mean too? Nothing. Neither one of them fucking means anything. They're a stupid idiom for trying to explain a market that's going bananas because of inflation and fucking money printing.
And
And
other reasons that you and I aren't privy to. Like people, when you understand how markets work and you have a good nose for bullshit and you see things that are out of whack, like, people then they see they let the market price shake their confidence and kind of say, oh, maybe I'm wrong. What am I missing? And they start looking for answers. And it's the same thing we just saw in the NBA. Like, somebody posted clips of Terry Rozier throwing games, right? And you're looking at these clips and you're like, people were watching this at the time, like, man, that doesn't look right, but you're not gonna like accuse, oh, he's probably throwing the game on purpose. And it's like now the guy gets arrested by the FBI. They were throwing games, and you look at the clips and you're like, well, that looks pretty damn obvious, right?
Tell you
And
what,
I'm like,
I
wait a
saw
minute.
those.
Last week, I'm watching the Lions and the Chiefs, and they're giving Travis Kelce a catch that clearly wasn't. They're taking away time, and it's like, man, this smells kind of funny. This smells kind of funny. But I'm not like a conspiracy theorist. I'm not. No, it smells funny because it is rotten. This is a league. The NFL owns 10% of ESPN that operates a gaming ESPN Bet, a gaming site,
Right.
right? They're sponsored by FanDuel. There's millions and millions of dollars on the line. And if it looks funny, guess what? It is funny. And I can't prove it. I'm not a forensics expert. I'm not,
Hey,
but
man, listen, Judge Judy says it best. I used to watch Judge Judy every day. I love that show. But she would say it best. Like, if it doesn't make sense, it's not true. That's
yeah,
it. She used to just say that shit all the time. People tell her some story and be like, and there would be some non sequitur about the chronology of their actions. And she'd be like, well, it doesn't make sense. So it's not true. And it's the same deal. I watched those clips of Terry Rozier before this whole thing broke. I saw them on Twitter, I don't know, 6 months ago or something. Somebody had posted them. And I was like, yeah, it really does and look, I like to watch sports. I've watched a lot of sports in my lifetime. I was like, really does look like he's just throwing the ball away in a couple of those instances. Like, those are plays where if you saw one of them happen, you would be like, that's the most boneheaded play I've ever seen. Does happen. You could be fucking Dan Orlovsky and run out of the back of the end zone and get the safety because you're just under pressure and the world's worst backup quarterback. Like, fine. But he was a Lion too, wasn't he? You're from
yeah,
Detroit?
he was.
Yeah, so you know exactly what I'm talking about.
Yeah.
Um, so that does happen once in a while. But then when you see the clips of Terry Rozier strung together, and what was funny was when that news broke, my best friend sent it to me, and he's like, "Dude, you're not going to believe this," because I always talk sports with him, and you know, being a former sports gambler, I was always like, oh my god, it's so rigged, like the missed extra point or the double doink or the backdoor cover to cover the spread. So it does fuck with the integrity of the game. But I said to him, I said, oh, that's nothing compared to that clip that I sent you like 6 months ago because I thought it was somebody else. I said, whoever that guy is, they got to go after him. And then I saw somebody else had posted it, and I was like, oh, wow, that was Terry Rozier. Like, we had it nailed 6 months ago.
Yeah.
So
Trust your eyes, your eyes aren't lying to you. And it's the
and
same thing in the
it's the
market.
same.
Your eyes
It's the
aren't
same in
lying.
markets, and it's the same in life.
It
You
looks
know,
funny to you that Fartcoin is going up to a 50 billion valuation. Guess what? It is funny. I don't know how. I can't. It is funny. Okay, it's not organic. That's not natural. If it looks funny that GameStop, this narrative that they created about, oh yeah, a bunch of redditors are like, we're gonna stick it to the man. It's total BS. Like
and
you gotta trust your instincts.
don't be afraid to trust your instincts or ask questions when you're dealing with an expert or somebody that either knows more than you or somebody that is more familiar with the field than you are, because if your intuition is telling you that something's wrong, you should just bring it up. Like, don't I can't tell you how many times in my life I because I made a deal with myself when I went up to Niagara Falls, and I committed to myself. I kind of made this like internal deal with myself. It was right around the time in my life where I was trying to get my shit together. I was like 27, 28, and I was thinking to myself, like, actually, I was, let me see, yeah, I was like 28, 29. I was thinking to myself, like, all right, there's a couple things I want to work up here as I become a man. I want to interrupt less. I want to, I know I didn't have the most important thing to say in every room that I was in. I wanted to learn how to listen. I wanted to learn how to be like more empathetic, and generally was just trying to be less of a piece of shit and, less of a child and more of a man. And one of the things that I committed to along those lines before I went up to Niagara Falls was, look, I'm taking a risk and I'm going to say what I have to say if I have to say something. I'm not going to hold back because I at some point you have to have confidence in yourself that you have something to contribute. And I had kind of made this deal with myself that, like, if I'm going up there to do this, I'm going up there to be an asset and to be a part of a team and to offer up what I can. And there were multiple occasions. The first of which was a meeting that I wasn't invited to. They were right after I got hired. They were doing a meeting discussing the annual general meeting. That was like upcoming. They already had most of it planned. They had some outside consultants that were helping with them. So I don't know. Maybe it was a month after I got hired, so most of the stuff was done. And a couple of people were having a meeting about it, and I just showed up. I wasn't invited. I just brought a pad and sat down, and people were like, "What are you doing here?" And I'm like, "Well, I figured I'd just be here and take notes. Yes, it's kind of like part of what I'm doing." So there were instances like that, and there were instances where, look, like I'm talking to a chemist. Okay. Like I don't know dick about chemistry, but like every once in a while I'll be like, dude, should that fucking thing be sitting right there next to that open flame? Or like, is that the right piece for this? Or like, is it me, or is the feedstock like not like, is the screw for the feedstock not working? And you can bring these things up in a polite fashion. You don't want to act like you know better than everybody else, but probably half the time your instinct is right. And the other half of the time, hopefully you're dealing with somebody that's smart enough to have the wherewithal to know that you're asking about it from a good place and they're not like offended by it. So you should always go with your intuition and always press up in areas where you don't think that, you don't think, look, being a short seller, you're learning about all these different businesses that you don't know anything about to start with, right? So you have to know a little bit about a lot of things. So you have to learn about whatever the auto business, and you have to learn about the energy business, and you have to learn about the financial business and the insurance business and whatever. And so when you're breaking ground into a new, okay, today I'm learning about a company that makes band-aids. It's like, okay, great. Like, well, what the fuck do I know about that? Well, nothing really. I don't know what the market looks like. I don't know what the input costs are. I don't know what the margin should be. I don't know what the materials are. And I don't know like what the distribution looks like. So how do you expect to navigate something like that without asking dumb questions and pressing up against people that know more than you do? And you can't be afraid to do that, because you surprise yourself every once in a while when it's like, oh shit, like you have something right. It's like the other day, I was playing chess in the park against a guy who's beaten me 5,000 times. And I was in a position where I had both my rooks on the second to last rank. And I was just thinking, like, I think if I just move this one rook here, it's checkmate. And so we're playing a time game, a 3-minute game. So I don't have a lot of time to think about it. I'm looking at the board and I'm looking at his pieces. And I'm saying, like, he must have thought of that. It's the world's simplest like mate, right? The back rank fucking checkmate. It's the shit that you blunder like when you first start. This wasn't the same, but it was similar situation. And I'm looking and looking and looking, and it's 5 seconds and 10 seconds, and I'm saying, man, the queen can't come back, the bishop can't come back. I'm like, what? Like, what's going on? Until finally, I just say, okay, like I just got to jump, and I did it, and I checkmated the guy. He just wasn't paying attention, didn't see it. He was pissed off about it. I was happy about it. I was losing the game before that, and so sometimes, as my old boss would say, you just have to jump over the falls. That's what he said to me one day. I was like, dude, should we be, doing this, or this? We'd like to think we were OSHA compliant at all times, but it was an interesting group of people up there. And we worked basically like 24 hours a day. The guy who ran the company was working like 120-hour weeks. And so every once in a while, I'll be like, dude, should you be operating the genie boom? Like, do you have a license for that? And he would just say, like, hey, you got to jump over the falls, meaning like, got to take the risk. You got to jump at some point.
You got to, and that's a perfect, kind of setup, because I want to get back to your story, your personal story, and so you get back from Niagara Falls, the company kind of peters out. You're now, newly an IR guy, but you have this appreciation for the short sellers that you've been kind of, fighting with a little bit, and now, like take me to the next part of the story. How'd you get into
Well,
short selling?
actually,
Yeah.
the like one of the first short sellers that I read was Geo Investing, who was one of these companies that was working on Chinese reverse takeovers. And while I was working IR, I actually contacted them to try to get them to come to Niagara Falls and vet the business. Essentially, I wanted them to pitch. I wanted to pitch them the company as a law, because there were a ton of short sellers, and we were a cash burning company, right? So like the financials were dog shit. So there's no way around that. The question was, did the company have the potential to eventually become cash generative? And a lot of the questions were, did the process work? And being there, I knew that the process worked. And so my goal was to get Geo. I remember calling Dan David, who was running Geo Investing at the time, and having a discussion with him on the phone, like, hey, like, can you bring your team up to Niagara Falls? I'd love to show you this business that, you know, everybody thinks is a fraud and it isn't. And I remember at the time he said to me, like, look, like, you're not, the company was trading at, 60 cents or something at the time. I don't remember, but he's like, I don't think that you're going to have too much of a problem with short sellers with your equity at 60 cents or something. And like, we got other projects and, you know, but for some reason they didn't want to do it. So I was like, okay, fine. But when I got back to Philadelphia, um, I looked up Geo Investing and realized they were a Philadelphia like area company. And so I actually called Dan David back and I was like, hey, I'd love to come work for you guys. Like, I'm a writer. I had written under Quoth the Raven for a year or two at that point, which I was basically just doing for like beer money on the side. Um, and I had just said to him, like, I'd love to. I was looking for a job, man. I came back to Philly. I was like, I don't know, probably $50,000 in credit card debt and no money at all to my name. And I was making a pittance just writing on Seeking Alpha part time. So I had to get my shit together and try to figure out like where in the intersection of moving back to Philadelphia and what I had just learned and what I was always good at, which was writing, um, where I could put that to work. And so I wound up interviewing with Dan, and I was lucky. He had actually read some stuff that I had written about Quest Core, I think, prior to that. So he knew my pseudonym, which was funny because really nobody knew Quote the Raven at that point. Um, so I just got lucky, and he was like, I've read some of your stuff. Like, we need a writer. Uh, and I went out and interviewed, and went and started working for them. And that was like another level of learning about due diligence and another level of learning about all the things that come with equity analysis and really just looking at the work that they had done and some of the things that they had in the hopper, some of the thing going back and reading the things that they had already published, um, and then seeing how comprehensive the investigations really were. And as this chess player would say to me, there's levels to these things, right? There's just a different level of analysis necessary to work there and to be a writer there, than there was working at this company. So it was a nice natural progression from there. And, it was great because I got to meet a lot of great people, met a lot of, great people in the industry. I had told you that I had started following the Herbalife saga in 2012, 2013, whenever Ackman did his first presentation, just kind of following it as a hobby. It became like the thing I was obsessed with after this company went defunct. So I learned everything I could about that. Um, I was lucky to meet Whitney Tilson at one point in New York at one of Ackman's presentations that I attended. And Whitney was kind enough to introduce me to, some people in the industry. I think Whitney Tilson was really like the first like Wall Street hedge fund manager guy that I met. Couldn't have been nicer. And then from there, just kind of got to know some people. Was following the Quest Core story for a while too. Was nice enough to hear back from David Einhorn when I emailed him about it, trying to do some research on it. Met with him in person. Couldn't have been a nicer guy. And that was kind of how it all started.
Looking
Just
back now, like, so many short sellers have had to close up shop. Value investing is also like, I think maybe 5 years behind short sellers in terms of like,
yeah.
capitulation. Um, it just, I wrote about this once. It just seems like the market without short sellers, certainly without like value investors and anyone doing any kind of fundamental analysis, is so much riskier than it was beforehand. And it's like, people define risk by, Sharpe ratio, standard deviation. The market hasn't gone down, so it's not risky, which is, of course, the opposite of what is true. It's not anti-fragile. The market is now very fragile. You can't sustain higher and higher valuations. It becomes harder and harder to sustain them. And I don't care what
Yeah.
80 years of S&P data says. Like we're not going to replay the same 80 years over and over again. It's a bigger world, and there's more than a couple cycles here that we can look at, and other countries and other assets. And it just seems to me we're in a very precarious place. And without
The
short sellers,
distortions, Phil, the distortions in the market are really unlike, I mean, it's crazy because people that haven't been around for a long time, and I haven't, what is it, 2025? So, you know, give or take 15 years, I've been following the market very closely. The distortions in the market now are so grandiose that we have just completely lost our compass. Like there is no fundamental analysis anymore. There is no active management anymore. I was talking to Julia LaRoche about this, basically on the same topic that you're talking about, how short sellers are good for the market. You used to be able to read an Einhorn letter and see what he was short, and you understood that, okay, like this is trading at 100 times sales, it's in a bubble, and it'll crash at some point. And then at some point that just stopped happening because the spigot of liquidity was on at such full blast that it just overrode any type of fundamental pullbacks in the market, while at the same time you have people getting long with leverage, you have more money than ever in passive funds, and you have an investing base that is conditioned to not be okay with any type of discomfort at all. And so at the first 2% move down, people panic. At the first, down 5% week, the Fed wants to cut. It was like in April, was it April? It was at some point when the market was down 5 or 10% in a week. You had Jeremy Siegel on CNBC calling for an emergency 75 basis point cut. And Guy Adami that night on CNBC was like, look, I understand Jeremy Siegel's probably a nice guy, but like, why should we cut 75 basis points? Because the stock market was down for 2 days. Like, and he's right. So when you have a Wharton PhD on TV, national television, publicly shitting himself over a 5% drawdown in equities that are trading at 40 times earnings and have been consistently at all-time highs for, ever, then we have an investor base that is conditioned for nothing but complete comfort at all times. And so they don't even see these market-wide distortions right in front of them. It's like, who
yeah,
the
and
fuck would want to be in regional banks right now? Who the fuck would want to be in Carvana or subprime auto right now? The collapse of that industry couldn't be clearer if it was fucking bludgeoning you in the face with a mallet. It's right there. It's right in front of you.
it
But no one cares, and no
nobody
one
cares
will care
because
until the off-balance sheet entities implode or until one
we all know
regional
how it
bank.
ends, though. But
Right.
why should you care? We all know that at the end of the day, the Fed is going to come in and backstop all the consumer loans. They're going to backstop. They're not going to allow anything to unfold. Look, remember, during COVID, they doubled the stock market, literally doubled the stock market, keeping rates at zero, doubled it, while inflation, we had like 25% cumulative inflation.
Yeah. With
25%
no
cumulative.
economy.
Yeah.
We had no economy, and we had the Nasdaq tripled off its lows
Yes.
in
NASDAQ
in,
tripled
in the
off its
five
lows.
in the
Yep.
5 years. So they papered over the entire economy. And so I mean it is a completely fake system. Like the economy
Yes.
has nothing to do with the stock market. And to your other point, I was in a bar on Park Avenue a couple weeks ago, and there were a couple of younger gentlemen, lovely guys, maybe late 20s, early 30s, had just come back from a raucous night at the strip club with the boss, and we're sitting there kind of talking shop a little bit. And I was sitting next to them, and somebody said something about commercial real estate. And I said, "Oh, you work in commercial real estate?" He said, "Yeah." And I said, "Let me ask you a question." I said, how bad are things right now? And he kind of just shook his head, you know. And I said, how bad are people's books mismarked? And he was just like, he said, like, it's everywhere. And I said, okay, let me ask you a question. And they worked for a larger commercial real estate company in the city too. I'm not going to mention the name, but he said it's bad, you know. And I said, okay. I said, what's going to happen when you have to find a bid, or when somebody goes to try to find a bid, you know, at some point? And just like he was saying, like I asked him what the weather was, he's like, we're going to need a bailout. Just like that. There's equal parts matter of factly and, you know, just like he was just flicking his fucking thumb, no big deal. And that's it. You know, that's, you said that's the way it ends. And everybody knows that. So
Yep. Yep. And inflation is, of course, a bailout in another sense.
correct.
You know, so um, well, you know, we gotta survive in this game. We don't make the rules, right? We just we gotta play within it. But it's a hell of a story, man. It's really great. I love the Substack. I absolutely love what you do and the podcast. Hope you bring that back and do more of them. But for any of the listeners that don't know, where can they find you?
My Substack is quoththeraven.substack.com. It's called Fringe Finance.
There it is. And really appreciate this, man. Great talking as always. And we'll be back with a new podcast next week.
Thanks, Phil.